Hello everyone, my name is Ellen Roche and I am with Movement Mortgage. I'm a loan officer and I've been a loan officer for the past 35 years in the greater Haverhill, southern New Hampshire area. And I am here today with Judy Moynihan, a local realtor. Judy, could you tell us a little bit about yourself?
Yes, I'm Judy Moynihan from Century 21. I've been doing real estate in this area, also southern New Hampshire, for about 20 years. And I'm happy to help. I'd like to help out and simplify this process.
Yep, so we're here today to help you figure out what the steps are to buying a home. We're going to go through the process and try to simplify it for you. Because let's face it, it is so overwhelming today trying to buy a home. You're hearing so many different things, like is it a good time to buy? Judy, is it a good time to buy?
Well, it's always a good time to buy real estate. The interest rates are up a little bit, but there are other ways to work around there. There's so many more dynamics to buying the house and different ways to do it that we can get creative with any type of person who's trying to buy a home.
Right.
Or set them up to buy a home, say 6 months to a year from now.
Awesome.
So, but I do believe that any time's a good time to buy a home. Your opposite being renting. We can talk a little bit about renting versus buying a little bit down the road. But yes, I have to say, and I could go on and on about why it's a good time still to buy a home.
All right. So why don't we start with, like, you know, what's the process? Let's start with the process of buying a home. And, you know, another thing that I hear people complain about, too, is they think that they have to have perfect credit. You don't necessarily have to have perfect credit. There is so many different, as Judy was saying, there are so many different programs out there right now that can, you know, help that first-time home buyer. Whether you have a credit score in the 580 range all the way up to 800, there's a program for you. And also, another myth is people think that they have to have 20% down. You don't need to have 20% down. You know, you can have as little as no money down in some cases.
On some processes, yes.
Right, absolutely. What are some of the other home buying myths, Judy, that you run into?
Well, most people think that they can't get a mortgage if they've changed jobs a few times. I hear that a lot, Ellen. Could you address that issue? Do they have to have a job for 2 years?
Well, they don't necessarily have to be in the same line of work, but they have to have worked and showed income for the past 2 years. So we're looking at a 2-year job history. So what I mean by that is somebody could be self-employed and then they can decide to go to a salary position or an hourly position, and that's okay, as long as they can show that they've worked for the past 2 years. It doesn't have to be the same job or the same line of work.
No, well, that helps a lot.
That does help, absolutely, yeah.
Because I feel, at one time you did need to have 2 years, I think, of employment, and that's what's confusing people.
Well, you have to have employment for the past 2 years. It just doesn't have to be in the
same job.
Same job or the same line of work.
Yep.
You know, it's funny you say that. I just had this happen. I had a customer who right before closing, so it's okay to change jobs, but when you're in the middle of the mortgage process, you don't want to change jobs. I mean, you could, but it just adds, you know, another layer of what's needed. So in this case, I did have somebody that changed jobs right before the closing. And what happened there is we had to postpone the closing until we could verify this new job. So it's best not to do anything like that if you are in the middle of a process, you know, the home buying process. But definitely, you don't need to be in the same job for the past 2 years.
Yeah, but it's important to sit down with a lender ahead of time so that they can explain that type of...
Oh, absolutely. So yes, absolutely. So I think that is one of the biggest things is the first step in buying the home is you really want to sit down with a lender and go over what exactly is needed to start the process. And I can get into that a little bit right now. We can talk about that. So one of the first things, and you want to make sure that your credit is, you want to have your credit at a level where it is decent, because the better your credit is, the better rate and program you're going to get. And we can get into that a little bit more
In depth.
in another segment. But right now, I just wanted to say the things needed. And what we'll do is we'll also have this showing below the screen. But we're going to need your past 2-year tax returns and or W-2s. So if somebody's self-employed, would need the tax returns. But if you're hourly or salary, then would need the past 2-year W-2s. We would need a recent pay stub that reflects year-to-date income. That's important. We want to see what somebody has made year-to-date, you know, a breakdown of overtime, hourly, and you know, any bonus income will show up on that year-to-date pay stub. The other thing that we need is going to be the assets. So we're going to need to see where the down payment's coming from. The past 2 months' bank statements is what is needed. So we need the past 2 months' bank statements, the past 2-year proof of income, and a recent pay stub, and from there we'll pull the credit and decide what is the best program. And we'll go over every possible program.
There are a lot of them. There aren't one. One of the conversations I hear a lot with buyers is they're really under the perception that there's only one real mortgage, but there are so many different programs, so many.
Absolutely. And especially in today's market, we have a few different first-time home buyer programs where you can put as little as 3% down. And the benefit of those programs is not only are you putting as little as 3% down, but you're having a lower rate than what the going rate is under those programs.
Yeah.
Mass Housing and New Hampshire Housing are 2 other good avenues for first-time home buyers, and in a lot of cases they have down payment assistance money.
Yeah.
And that's something we can talk about at a later date as well.
Yeah.
But I think that, you know, the programs, absolutely. And then for somebody that does not have the best credit, we have FHA, which is a government program.
Yep.
And Judy, talking about FHA, from a realtor standpoint, what do you see are the better programs? You know, what does a realtor want to see for the program? Like,
I want them to come to me with a pre-approval, that they've
Okay,
sat
yeah.
down with a lender, because there's so many different avenues of them to come in. And then for FHA, they need a little bit of money, the 3%.
Yep.
And they have to be approved. And the other thing also is not all the homes, some of the condominium complexes have to be FHA approved too.
Right, right.
But
what, like when somebody's coming to you to make an offer, do you think that the offer is stronger if it's conventional versus FHA? What do you see with that?
In the competitive market that we just came out of, the FHA buyers did have a little bit more trouble because the conventional people, they felt a little bit more secure with them. Where really that's not always the process, but I think it was a misconception that was out there, is the more you came in with,
Right.
helps out.
In this particular market, the sellers are looking more for a conventional buyer. I've been noticing that too. Yeah.
And the FHAs have been taking, but they're making a comeback.
Yes.
The
I
market
agree.
has
Yep.
changed a
Right.
little bit, and we're able to work more, and more educating your sellers too, that, you know, they're qualified, the money's there, it's,
Right.
but, you know, you do conventional and cash buyers. There's
Right.
another one, we've had a lot of cash buyers, but we're gonna talk about mortgages
Yep.
and first-time buyers more getting the mortgages that you need,
Right.
because it's doable.
Yes. So that's the key right now. You know, the first thing is getting that pre-approval, figuring out what program is going to be best, and it's going to be based on the individual. How much money do they have? You know, what is the income? And then we can get into like the debt to income ratio. How that works is when you are getting pre-approved, the underwriter, you know, the guidelines, we're looking at a 45% total ratio. So what that means is we take somebody's gross monthly pay, and let's say, for instance, it's $10,000.
Okay.
And we take 45% of that, and that's going to be what a buyer cannot go over for the mortgage payment and the total debt.
Okay.
So that's how that works. So it's a total of 45%. So if somebody has no debt, then their mortgage payment can be at that 45% mark.
Of what you're bringing in.
Yeah.
Yep.
Yeah. So there's a lot of factors and a lot of things that go into, figuring out what somebody qualifies for. So I think the best thing for, a person that's just starting out trying to get pre-approved is sit down with the lender and go over what's best for them.
A lot of options.
Absolutely.
And I'd like people to know that there are many options.
Right. Exactly. We have conventional, FHA, mass housing, jumbo loans. There's a loan, in today's world, there's a loan for every buyer. There really is.
There really is.
Yeah.
So let's make it a little process. Well, once you've met with the lender and you've gone through all your options, it's time to go meet with a realtor and find a home.
Absolutely.
So when you come to me and you're prepared, because again, it's been a very competitive market, you have to be prepared.
Absolutely.
You have to have that pre-approval in hand, which means that Ellen's pulled your pay stub, she's looked at your credit, she's done everything on that end, that you're coming to me prepared. You see the house, you love it, you fall in love with it. I see it when they go in. I know the ones, you just can see it. Well, we have to be ready. And that requires the lender getting you ready, then coming to me, because that process comes down to 24 to 48 hours of getting your offer accepted. So you really need to have your ducks in a row.
Absolutely.
Ellen's going to get your ducks in a row.
I'm going to get the ducks in a row. And once they are in a row, then we can get you over to the realtor, and the realtor can take over from there. And our next segment will be about putting that offer in and what's needed. So thank you very much for this segment. Once again, my name is Ellen Roche from Movement Mortgage, and I'm here with
Judy Moynihan. We'll find you a house.
Hello, everyone. My name is Ellen Roche, and I am with Movement Mortgage. And I'm here with Judy Moynihan from Century 21, and we're here today to let's talk real estate.
Yep.
And I think the first thing that we wanted to talk about today is once you are pre-approved and you're ready to go see the realtor, and then what happens?
Well, you take that pre-approval letter. I take a look at it because the pre-approval letters can be different to see what you're looking for. You're pre-approved for a single-family home, a condo, or a multifamily. So at that point, what we do is we start looking. That's the fun part. We can, usually I'll put a little tour together. We'll go around in a couple days, a weekend, take a look at what gives me a feel for what you're looking for. You really have to get out there to take a look at these homes, go into the homes to really see if that's gonna work for you. So many times we take a picture and go to a home and it's a little bit different. But there's different ways to look at a home. Most people today look at a home online. So you're going to I'm going to set you up with a search. You're going to be seeing lots of homes, and you go through them. You put a couple that you really like, and we go out and take a look at them.
And once you do like a home and you're ready to put an offer, what are the steps, what do people need to know in regards to making that offer, like taking that step, and actually going for it?
Well, the number one is always price. That's the first thing they ask me. How much should I put the price in for? So what we do is a market analysis. I like to sit down, explain to them, what houses in that area with the same criteria, bedrooms, bathrooms, the location, what they're going for. So we negotiate amongst ourselves on a plan. How much are we going to put the offer in for? And we write up an offer. There's a lot of paperwork behind that, but the realtor takes care of the paperwork. For the client, they're more interested in how much can I get the house for? What should I put the offer in for? So we do a little bit of work on that based on what the homes in the area have sold for. And we come up with a plan. We put an offer in.
Yep, sounds good. Tell us a little bit about what's going on right now, though, in the market, where people they've got to come up with their highest and best offer, and they're up against multiple offers. Tell us a little bit about that.
That's still happening right now, and we don't have a lot of inventory right now, and that's creating that market where there's still competing heavily for a home. The homes come on, and if the homes are prepared really nice, it makes a difference. You're still getting a lot of people that want them. I'm seeing probably 5, 6 offers in, so you're going to be competitive. You need to You need to buy that into the offer. In most, right now, we're not seeing a lot of the crazy overbids, $50,000 to $100,000 over the price they were asking. We're coming down more to the asking price on what they are asking for, and then having to compete from there. And your best bet at this point is, yes, your highest and best. And the realtor can help you with that.
Right. So I just had a situation where somebody was putting an offer on something, and they were going higher than what the sales price was, and the question came up, well, what about that gap? Like, what happens if the appraisal doesn't come in? That's a question that we really should.
It's a conversation that I
yeah.
have to have when people want to put in an overbid, because the bank is only going to pay what the market analysis is. That's why we pull the prices of what the area houses have sold for, because that's what the bank's going to do. So say you want to put $50,000 over, you really want the house, you love it, it fits perfect. It doesn't really necessarily mean the bank's going to kick in that extra $50,000 over. So that's where the appraisal comes in. The bank sends an independent appraisal on their own to the house to see what it's worth. Of course, they need to protect their investment.
Right. And I'll talk a little bit about that, about the appraisal. So the appraisal does come from an independent company. It's not something that that I have any control over. As a loan officer, we have no control over
Or the realtor.
Or the realtor. And what happens is the appraiser goes out and he has to find 3 like properties, 3 comparables to the one that the buyer is purchasing. It has to be in basically the same area. So if you're purchasing in a particular town, those comparables have to be in that town.
Yep.
They can't be from the next town over. They have to be in a close proximity. So now let's say you've made an offer, $50,000, $100,000 over what the purchase price is, and that appraisal does not come in. What happens at that point? And this is one of those things that buyers really need to know about. So what do you tell them when that happens?
Well, have a conversation about the appraisal process, and that the bank is going to send somebody out to take a look at this property, and it has to come in those 3 properties as you explained, and that's what I bring up when we're coming up with the price, to educate them, to let them know that,
because
if you're going to go another 50 or 100 that you want to throw in on that, that you might have to come in with that out of pocket.
That's what I was.
And make up that gap.
Absolutely, that was what. That's exactly what happened to the particular person that I was going to talk about. Is they were not educated by the realtor in regards to that, and that's tough, because if you don't have the money for that, you might be responsible, and you could lose the house. So that's one of the things you definitely want to be careful of.
Yes, yeah.
Yeah, absolutely.
And at times you might even jeopardize your deposit too if you need to back out because you don't have that extra money to cover the gap. So it's important to talk about that ahead of time.
Let's talk about that too, Judy, about if that were to happen. And another reason for a realtor, why it's so important to have a realtor for cases like this, because when you put an offer in and it's accepted, and then you go to purchase and sales, you have a clause in there called the commitment date. And that's when you have to have all your ducks in a row and have financing by that particular date. If you don't get the financing by that date, you can write a letter saying either you want an extension or you want to be declined. And it's only then that you can get your deposit back. If you wait till after that date, you're in jeopardy of losing that deposit.
Yeah.
So, it's another reason why it's so important to have a realtor, because the realtor will make sure that you're protected. They'll make sure that those dates are met.
Yeah. We'll take care of that for you. You know, you meet with the lender, they give you that pre-approval, you go with the realtor. There are a lot of conversations that we have to have about the process.
Right.
Appraisal is just one of them. So I've always said that a good local realtor can save you thousands, and they actually may even save you deposit. It's an educated process.
And let's talk about that deposit. So when somebody is putting in an offer, how much do they normally have to put in when they're making that initial offer? And then let's talk about the down payment too, and how they hold it in escrow.
All right. In Massachusetts, you do a offer to purchase. And on the offer to purchase is the first step. It's different in New Hampshire. But in Massachusetts, you do the offer saying, you know, I like it, I want to put an offer in. Usually you don't, 1,000, some people require a little bit more, but for that process, you want to put down $1,000. And I usually like to say, that's just say like buying a car. I want to buy the car, here's $500, hold the car for me. I'm going to bring it to a mechanic and have him look at it. Well, you're going to do the same thing with the home. It's a large purchase. So the purchase, you get 10 days with the offer to purchase usually. You put down maybe $1,000, $5,000. You don't put down a lot of problem. But at that point, you have the option to get a home inspection. It's like bringing the car to the mechanic and take a really good look at it. At 10 days, you decide, do I like the house? Is the house going to be in good shape for me? Were there any hidden surprises that you might want to renegotiate at that point? It's another whole process. But let's just say you do the home inspection, you get there, you put down your $1,000, everything's fine. Now you move to a purchase and sale agreement. The purchase and sale agreement is when really things really get going. That's when it's going to go back to you, and we're going to say, Ellen, we found the house, we like the house, everything's moving forward.
Right. And the key words I think that we like to hear is it's under agreement.
It's under agreement.
It's under agreement. So once it's under agreement and you've had the home inspection and everything's good and you sign that purchase and sales. Oh, and by the way,
You do have to put a second deposit.
right, and also at that point we also like to have an attorney look at that purchase and sales a lot of times before a buyer signs it, just to look it over and make sure that, I think that buyers feel better when an attorney has looked over that purchase and sales.
Well, yes, because that's more of a legal type of thing. You do want an attorney to look at the purchase and sale. He usually adds some things sometimes. He'll usually just tell you it's okay. And when they give you that okay, you do have to put a second deposit. Now, that second deposit is much more of a considerable. Usually they like to have, a lot of 2%, either 2 to 4%, I find. That's what I usually go for, depending on the purchase price of the home.
Awesome.
But you do have to have that second deposit, and then you move forward on to filling out your mortgage application and going for that mortgage.
Absolutely. And in the next segment, that's what we're going to get into. We're going to get into exactly how to fill out that application and the whole mortgage process. So thank you for tuning in today to Let's Talk Real Estate, and we look forward to the next session.